Hi, welcome back to my channel. First off, I want to say I am not a financial advisor, so this video is being made for entertainment purposes only. This is not financial advice. Alright, so we're going to talk a little bit about penny stocks and some of the penny stocks. I'm going to cover three of them in here. We're going to take a look at HMBL, HMBL. We're going to look at FORW, FORW, and Metamaterials, MMAT. All right, so anyways, day trade, I'm going to expose some of the things about penny stocks and why most of you should probably avoid these at all costs. But anyways, day trading penny stocks has skyrocketed in popularity in recent years due to the low barrier to entry and the ability to turn small sums into large gains. Savvy investors who have learned how to make money with penny stocks have the potential to make quick profits, but the vast majority of penny stock investors will lose their shirts. And this is what I'm finding out is that most people are losing their behinds on these. And of course, they're not going to tell you on there. People are only going to tell you about the one that they hit and made a quick buck on a fast trade. But there's more bag holders on these than you could ever imagine, and the casualty list is it's crazy how many people are a casualty to penny stocks that have just lost their shirts. And they're never going to get that money back because they bought into all the hype and stuff. But anyways, there's four tiers of penny stocks. The tier 1 penny stocks, these are the stocks listed on major stock exchanges like NASDAQ and the New York Stock Exchange. They're usually priced below $5 per share. Although they can be a bit higher, they're held to higher standards than OTC penny stocks because they have to provide financial information to the exchange, which means they're less open to manipulation. Then you have tier 2 penny stocks. These are traditional penny stocks that are typically between 1 cent and 99 cents. Tier 3 penny stocks, these are sub-penny stocks which trade below 1 penny per share. Ultimately, these companies aren't strong enough to have the stock priced at 1 penny per share. You'll never find these stocks on the New York Stock Exchange or the NASDAQ. Tier 4 penny stocks. These are 000 stocks, which means they are priced between 0.0001, that's 3 zeros, that's 10,000th of a penny, and 0.0009 cents per share. Oftentimes, the hot penny stock alerts are on these stocks and primarily benefit those who bought the stocks first. Remember what I was telling about these pump and dumps? These guys always buy the bottom before they make their videos and pump these things. And these gurus, before they hit the chat rooms over at Reddit and all that, they've already laid the groundwork and they've already bought their millions of shares before they pump these, before they get you people, the retailer that thinks they're investing. I mean, you're actually just a gambler when you're playing with these. You're gambling. You'd probably be better off really going over to taking a trip to Las Vegas and hitting the slot machines. Your odds would probably be better, seriously, with $1,000 to maybe hitting the slots and walking away with some money. But if you're playing these, you wouldn't walk away with your win on the slot machines. If you won 10 grand, you're going to put it right over there at the roulette table or something, or at the blackjack table, because that's how most of you all are that are playing with these. But I'm just trying to explain to you why these things are just it's crazy. It's crazy the amount of people that are playing games with these penny stocks. Do penny stocks really make money? Yes, but they can also lose a lot of money. Penny stocks are a risky investment, but there are some ways to lower the risk and put yourself in a position for money-making penny stock trading. And here's some things I wanted to run by you. Pick stocks from companies in the OTC QX tier of the OTC markets, because this tier has stricter financial standards for listed companies. These companies must comply with U.S. securities laws and meet higher standards of operations compared to OTC QB and OTC pink markets. Avoid pink sheet stocks, which are prone to manipulation and fraud. The most reputable companies are not only more likely to give you a return, but they're also a less risky investment. Avoid pump and dump scammers. Many OTC penny stocks will be promoted as the next big breakout. I mean, how many of these have we seen lately where, you know, especially like with Humble? We watched Humble stock start out last November at 4 cents. And you got to remember, it was 0.00004 before it hit 4 cents. So there was millions upon millions of shares laid at the groundwork by the in the stealth phase with the smart money that laid the groundwork before they came out with how Humble was going to be the next PayPal. And they got the people to rush in. All the gurus on YouTube pumped it, and you watched Humble go from a 0.00004 cent stock to a $7.72 stock with a market cap of 7.7 trillion or billion, 7.7 billion, and now it's sitting at $1 billion. So it's already lost 85% of its market cap just in the last 5 months, and they're still trying to pump it and telling you to buy the dip, and it keeps going down. You know, it's just crazy what people will do with these, you know. Anyways, avoid low liquidity penny stocks. Most penny stocks have a volume of around thousands of shares a day, but penny stock companies with breaking news could have a high volume of millions of shares in a day. How do penny stocks make money for you? This is the time when you're likely to cash in. And in the penny stock world, there's some major event nearly every day. That's why I tell you, don't even watch the news on these. You watch the stock price. As soon as this thing gets up, you get out. You get out. You don't get greedy and hold. The penny stocks are not a long-term hold. If you're holding long-term on a penny stock, you are a bag holder, and you're going to lose a shit pile of money. Okay, here's another thing. Don't overtrade. Once you find the stocks you want, buy where you think other traders will enter. Know when to sell penny stocks. Take quick profits and adjust the stops for small gains that add up over time. You may get lucky and have a big win on occasion, but most of your money will come from these smaller trades, little bits at a time. You know, get in and out fast. I've told you that in my other videos. Don't hold these things. These guys that are telling you to hold and to buy, and then they're giving you all this news on this company that hasn't made any money, they haven't done anything, and all of a sudden you're supposed to buy a bunch of it and hold it when the price is high. They get you to come in after they make their videos. They're suckering you right in. Focus on trading and not investing. There you go. Trade penny stocks every day, and you'll find that you're making money from buying and selling penny stocks rather than investing in the next big hit. Add it up over weeks, months, and years, you'll find that you're raking in cash. So yes, you can make money in this, but the problem is only about 10% of the people are making the money on these. 90% of the people are losing on penny stocks. Understand the business. It's important to understand the business you're investing in before you buy stock in the business. Doing background research and monitoring the news and market for big events is a common practice for day traders. You should apply this same strategy for trading penny stocks. I don't necessarily agree with this with the news, because I basically say stay away from the news with these penny stocks, because it means absolutely not that it means absolutely nothing, but I stay away from it because the news is so fake these days, you can't trust it anyways. You know, they're going to tell you anything just to pump something up. The next thing is diversify your penny stocks. While opinions vary on the number of penny stocks that you should own, you should be in at least 3 or 4 sectors of the economy that are healthy and growing. Only risk what you can afford to lose. There are no guarantees in investing, especially when you're trading penny stocks. You should only trade with money that you can afford to lose if the worst case scenario does happen. All right, so going back to the charts, we're looking at Humble. And to make a point here about this whole video, November 13th, it was trading at 4 cents. It hit its peak on February 8th. It was trading for $7.72 a share. The market cap was over $7 billion. Today, the market cap is $939.78 million, and it's trading for $1.05 per share. Forwardly, Forwardly was a penny back on November 18th. It hit its high of $1.33 on February 8th. All right. Now Forwardly's trading for 15 cents. And just in the last, let's see, let's go to MMAT. MMAT back in November, same time period. Okay, November 10th, it was trading for 53 cents a share. It hit its high of $21.76 on June 21st. Today it's trading for $4.75. And if you go back and look at all these videos of these guys that were pumping these on YouTube, were telling all you guys to buy these and hold, buy and hold, buy and hold, buy and hold. You know, they were selling. They were selling. They were selling that whole time they were telling you to buy and hold. The whole time this thing was on its way up, going up, all these stocks, the people at the bottom were selling. And of course, the volume slows, and then it's just a waterfall as these things come crashing down. And all three of these companies that I just mentioned, Humble, Forwardly, Metamaterials, I don't think these prices ever go back on all three. I just don't see it. You know, they're still going to tell you to hold. They're still going to tell you guys like me are crazy, you know. But I've seen this all too much. And I believe that, you know, please don't ask me in the comment sections either what you should do on these. I'm not going to give you any answers on these because I am not a financial advisor. I warn people about these. I expose pump and dumps. I expose these penny stocks. You know, yes, you can, going back, yes, you can make money on these, but my whole question is, why would you even play games with these? If you're going to gamble, you know, go to Vegas. Go to Vegas, you know, get a plane ticket for the same money you're losing in these. Because a lot of you, you know, have spent $10,000 or $20,000. What you got to remember with these, okay, when you go into a penny stock, statistically, when you go into these, let's say you go in with $1,000 you're going to buy into a penny stocks. Go into this knowing that $900 of that you're giving to the short seller. Here's your $900, and I get $100 out of my $1,000, because that's what's going on with these. The short sellers are walking away with all the money, and all you guys are bag holders. You know, I hate to sound mean and harsh, but you know, I got to get on some of you because you're pissing away your life savings. You're pissing away money that you've worked hard for, and you're pissing it away on these shit stocks, when you could be putting it in an index fund or buying index ETFs and holding them in a Roth IRA for long term for you know, instead of trying to get that big hit, trying to get rich quick. It's a trap. But anyways, I'm going to leave this one at that. And, you know, here again, you know, yes, you can make money on these, but 90% of you are going to lose. So, all right, I hope you enjoyed this video. Please like and subscribe to my channel, and I will catch you on the next video.